Hey, it's Clay at claytrader.com. This is my top 10 stocks as we head into Thursday, December 21st. This will be a technical analysis breakdown. So if you're someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple of clarifications. Number one, the candlestick that you see right there will still be moving around. That's because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. And then second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So stock number one, ticker symbol POL, and quite the mover today. Big volume, and now we have a nice pattern here headed into Thursday. So let me get this pattern drawn into play here. So top part of the pattern, we have this resistance trend line like that. Then there is a support area down here. So let me squeeze this down, make it a little bit more symmetrical, and let me change that to green to represent more so the support. And then change this all to the same color, maybe make it easier to see. So we have our resistance, we have our support, we have the big upwards move right here. A few golfers out here try to make it a little bit more visual. Put the golf hole down here, and this will be known as a bull pennant pattern. And while nothing is guaranteed, is it plausible that if the price can come up here and get a break to the upside of that pattern, that break in and of itself could create additional buying pressure? Even if you just want to call it a self-fulfilling prophecy, that is certainly a plausible outcome. Again, not guaranteed to happen, but certainly plausible. So if you like this price range, if you like bull pennant patterns, definitely keep an eye on it. Next one here, ticker symbol PRZO, and once again, have a very well-defined level, and when you got these well-defined levels, and you know that a lot of people are watching them, you can get those potential self-fulfilling prophecies. So I'm going to just quickly get this all into play here, when we once again have an area of support right there. Let me change that to green, and then just make the pattern the same color again. So we have our resistance, we have our support, you have the big upwards move here. You have the golf hole down here. So yeah, you guessed it, another bull pennant pattern. Now, what's a little interesting about this one is it's closer down here to the bottom part of the pattern right here. Again, no guarantees, but would it shock people if the price bounced back up and went up and retested? So figure out whether or not the price even breaks through the top part. But could the price bounce off the lower part of the pattern? Yeah, not guaranteed, but certainly plausible. So everybody likes to play patterns differently. Some people like to play the breakouts within patterns. Other people like to play bounces within patterns. But that's obviously up for you to decide. Some people don't like to play patterns at all. But my goal here is just to offer kind of a variety of different situations. So once again, if you like price range down below $2, you like bull pennants, keep an eye on it. Next one here, ticker symbol MARA. And overall, this thing acted human here a little bit, finally, with a pullback. But even with that, not a huge pullback. And I'm going to go ahead and just draw in the line that I think a lot of people are drawing. And yeah, so far it's been... every situation has had these downtrend lines, but yes, the market as a whole did pull back today. So a lot of stocks themselves pulled back today, which is what's giving the ability here to draw these downward sloping trend lines. But within the grand scheme of things, everything is still perfectly fine. Even with a bigger pullback here, you can see that even from this context, the overall trend still very much so in the upwards direction. As far as supports are concerned, nothing new here to report, assuming you've watched past videos. Still have $20.75 right there. And then you also have the purple line right there, which is the 50-period moving average. So going into tomorrow, that line is going to move up above it because, again, it's a moving average. So that line will move higher and higher, and will take higher priority over $20.75. But as of right now, you can see as I zoom in, that purple line is still slightly below the green line. So therefore, that green line at $20.75 still has the higher priority. But all things considered, the chart continues putting these higher highs and higher lows, but certainly a well-defined area of resistance right there. And if you like to play breakouts, certainly one to keep an eye on. Next one here, NKLA. And a pretty cruel one, if you let it be cruel to you. What do I mean by that? Well, there was this very well-defined resistance trend line, and opening 30 minutes, you can see right there, price did break above it and made a great move. So there is a lot of room in there for potentially people to scalp out of profits. But if you got a little over anxious, if you suffered from FOMO, fear of missing out, and you started buying up around there, well, I hope you had a stop loss in, because if you didn't, this thing turned around, came back down to its breakout level, and then just continued to fall. So a fake breakout here, and one where if you were quick on the breakout, you could have pulled out some profit. But if you held, or like I said, you suffered from FOMO, hopefully you had a stop loss because it turned around in a very nasty way. So moving forward, that level still remains a key area of resistance, that trend line right there. In the much more near term, that initial area of resistance is going to be that pink line there, the 200-period moving average. So you want to keep an eye on that. But big picture wise, that trend line will still carry a lot of weight. In terms of areas of support now, if this pullback continues, next main level to watch down here at the lows from there at 81 cents. Nothing fancy or complicated behind that logic, other than the fact of that's where the price finally leveled out on this bigger pullback right there before, heading back upwards, and actually put it in a new high today. So it went higher than it had been before, but like I said, unfortunately, it had a very nasty move to the downside. So keep an eye on 81 cents moving forward as a support. Next one here, AMC, and a brutal day here, not just because it was red, but because the price is now what I believe is at all-time lows. I don't think the price has ever been down this low before. So from a technical standpoint, you can see here, the price had been doing a good job of holding above 655, but with the price breaking below it right there, you can see that really opened up the floodgates and down it went. Granted, to be fair, the overall markets got hammered today too. So that certainly didn't help out at all, but that doesn't take away from the fact that AMC is now down here at all-time lows. And that's where the first update comes into play, which is based on a foundational rule, which states when levels of support are broken and closed below, they tend to act as resistance. So if there is any sort of attempted recovery back up, right here at 655 will be that first key level that you're going to want to watch very closely. I will go ahead and get rid of that level up there. In terms of levels of support, nothing fancy, just a question of where did the bleeding finally stop today, and that was right down there at $6.20. So for that reason alone is why I would consider $6.20 a key level of support. But yeah, overall, not a good day. Real quick, want to take a break and personally invite you to get signed up for this free live online class that I'm offering here very soon. So if you've been enjoying what you've seen and you want to learn more about this tool, how it can and should be used to build consistency and manage risk, then definitely get signed up for the free live class. If you're watching on YouTube, there's a link down in the description box you can click on, or if you're watching at my site, there's an area right there on the webpage that you can click to get signed up. So like I said, if you've been enjoying, then certainly get signed up for the free live online class. Next one here, ticker symbol NIO, and big pullback here. Again, to be fair, markets did have a bigger pullback, but this thing nonetheless was pretty excessive. So first update is just as we discussed, levels of support are broken. They tend to act as resistance. So if there is any sort of attempted consolidation and turnaround, first key level will now be right up at about $8.22. If the price can push up through there, next main level after that would then be that purple line there, 50 period moving average. So those will be the main battlegrounds on any sort of attempted turnaround. But as of right now, looking like all eyes are probably going to be watching that pink line there, the very famous 200 period moving average. Now, I'm not saying the price is for sure going down to that area. I'm just saying that looking back here, there really aren't any other areas of support. Now, as I say that, I suppose you could make an argument that right there could be an area of support. So I guess I'll take that statement back. But as far as just glaringly obvious areas of support, I think that pink line right there is going to be the one that stands out the most. So I'm just going to leave that there because I think most people will be watching that level. And if the price goes down there, no guarantees, but I don't think it would shock anybody if the price were to be able to get some sort of bounce off that level. And from just a general health perspective, you certainly want to see the price stay above that level, because if the price drops below there and then continues on down through it, that would be a big symbol that the bears are taking back over control. Next one, BLUE, absolute bloodshed today. But what makes this interesting, and let me take a step back, this will mean a little bit more to those of you that have traded for a while. Because if you have traded for a while, I'm sure you've seen stocks that gap down, and then after they gap down, they just do this the rest of the day. Bleed and bleed and bleed, but that was not the case here. The price actually did go sideways here, and essentially went sideways the entire day. Now, let me be clear, and that happened about $1.26. And let me be very clear. I wish I could, trading was so easy as, hey, find stocks that go down a lot and then just go sideways, and then that's for sure guaranteed the bottom. If only it were that easy. My point here is that it becomes a whole lot more plausible to think that maybe, just maybe, the sideways action is a leading indicator that this thing is going to get some sort of bounce. Again, it could very well just crash back to the downside. That's why risk management matters. But I'm just saying is, let's say the price actually did gap down and was just dropping. And I'm sitting here saying, hey, it looks like this could be some sort of bottom. You'd be totally justified to say, what are you talking about? Based on what? The price is literally still just bleeding. But that's not the case here, right? The price has at least started to go sideways. So a guaranteed bottom? No. Rational to think that maybe this is some sort of bottom before it bounced back upwards? That is certainly plausible. So keep an eye on this dynamic here, and we'll see if the price can continue to go sideways. And if it does, then that could very well, maybe get some sort of nice, even if it's a dead cat bounce from a trading standpoint, those can still be profitable. Next one here, TSLA Tesla, and like a lot of these stocks, absolutely brutal. So I'm going to go through it a little bit quicker here because not a whole lot to say compared to some of these other stocks. And like NIO, the main level of support that I think carries a whole lot of weight now is going to be that 200 period moving average. So like I said, with NIO, it does not mean that Tesla is for sure dropping down there, but I just don't see any other glaringly obvious areas of support. So to me, that's going to be a main level to watch moving forward. And if the price can go down there, I don't think anybody would be shocked to say, oh, wow, Tesla bounced off the 200 period moving average. So I don't think that, now, doesn't mean it'll happen, but definitely an area, especially if you like to play bounces, that you could potentially structure a trade plan down around that area. If the price does bounce, then yeah, at this point, it's got quite a bit of work to do, because even if it were to get back up to that level right there, you can see that's a pretty big distance just to get back up to that 50-period moving average. And even if the price breaks above there, then not that far away, you have that trend line right there as the main area of resistance. But yeah, overall, pretty big pullback today. But with all that being said, from the grand scheme of things, you can see that overall Tesla, is still in a very much so upwards move. I mean, not that long ago it was down here, and it's still way up there and above that 200-period moving average. Next one here, SOFI. And first level I want to map out now is this area of support that's looking like the price has a very logical chance to potentially head down to. And that's right there around the $9.10 mark. Going through the history of things, you can see 9.10 support. No, it's in it exactly, but broadly speaking, support around this area. So if the price does pull back a little bit more, I would definitely keep an eye on that. And then after that point, you can start to potentially put your focus on that 200-period moving average. But I think right now that's a little bit premature because, I mean, to be fair, this level at 9.10 has proven to be very strong. So, we'll cross one bridge at a time. And then like Tesla and a lot of these other stocks that have broken down below that 50-period moving average because of that rule that we've already talked about, when levels of support are broken, they tend to act as resistance. If there is any sort of bounce back upwards, then yes, that first key level of resistance will be that 50-period moving average, and the next key overarching level up there at the $10 mark, which again, cruel move here. Broke above it, acted like it wanted to be strong, and then completely collapsed. So for the people that suffered from FOMO and were buying up there, I hope they had a stop loss. Next one here, TQQQ, which is an ETF that follows the NASDAQ market. So if you believe the NASDAQ is going to go up, this one will also go up. It just allows you access at a lower price point, which makes it very popular. And yes, the NASDAQ had a terrible afternoon, just like the overall markets. So that is why this one has had an absolutely terrible afternoon. With all that being said, squeezing things down, you can see within the grand scheme of things, even with the nasty pullback, the price still has plenty of opportunities to build itself a higher base. And from a trend building standpoint, that's what you want to see. Now, the one big difference here that has not happened for several days is the price is actually now down below that purple line, the 50-period moving average. Last time the price was down below there, you can see it was back there in early December. So it's been several days since the price, and in fact, I should say it's been a few weeks since the price been down below that level. Doesn't mean that it's game over or anything like that. But that's the one difference here compared to all these other pullbacks recently, is all the previous pullbacks have at least managed to stay above the purple line, but that's not the case here. In terms of levels of support now moving forward, next main level to watch, in my opinion, going to be right down there at 47.50, and then after 47.50, as been the case with some of these other ones, at that point you would want to turn your attention to that 200-period moving average. If the price bounces back upwards, then yes, the key level of resistance now remains that 50-period moving average. But no doubt about it, big nasty move down. Is this the start of a bigger turnaround? Is this just a kind of an overblown pullback? We'll see what happens. But the next couple of days, I think, are going to be very revealing about today's action. So that wraps up the top 10 list. Again, if you like what you saw here and you want to learn more about the tool, then certainly get signed up for the class. It'll be very soon, Thursday, December 21st at 7 p.m. Eastern Time. So I hope to see you there. As far as these top 10 videos are concerned, if you enjoy these, please do two things for me. Hit the like button and leave a simple comment. Say hi. Tell me what you traded today. Give me your watches for tomorrow. But those two things help out the channel, help out the algorithm, and I thank you in advance for it. So let me know if you have any questions down below. Go get signed up for that free class. And like I said, please leave a comment and hit that like button. Thanks for watching.